The biggest housing bubble in US history implodes. What happened, why it matters, and what comes next. From skyrocketing prices to catastrophic collapse, how the largest housing bubble in American history unraveled, leaving millions reeling from its aftermath. 1. The illusion of endless growth. How we got here. For years, the US housing market seemed unstoppable. Home prices soared to unprecedented levels, fueled by cheap credit, speculative investments, and a pervasive belief that real estate was a sure thing. Cities like Miami, Las Vegas, and Phoenix became epicenters of frenzied buying and flipping, with homes selling for double or triple their original values within months. But beneath the surface of this booming market lay dangerous cracks, unsustainable lending practices, inflated appraisals, and millions of borrowers teetering on the edge of financial ruin. When the bubble finally burst, it wasn't just a market correction, it was an implosion that sent shockwaves through the global economy. 2. What caused the biggest housing bubble in history? The roots of the crisis can be traced back to several key factors. 1. Subprime mortgages gone wild. Banks and lenders aggressively marketed subprime mortgages, loans given to borrowers with poor credit histories, to expand home ownership. These loans often came with adjustable rates that started low but ballooned after a few years, trapping borrowers in unaffordable payments. 2. Wall Street's role in fueling the fire. Financial institutions bundled these risky mortgages into mortgage-backed securities, MBS, and collateralized debt obligations, CDOs, selling them to investors worldwide. The demand for these products incentivized lenders to issue even more high-risk loans, creating a feedback loop of speculation. 3. Loose regulation and oversight. Regulatory bodies failed to rein in predatory lending practices or hold banks accountable for issuing toxic loans. Meanwhile, credit rating agencies gave AAA ratings to MBS and CDOs, masking their true risk and encouraging further investment. 4. Speculation and overbuilding. Flipping houses became a national obsession, with buyers purchasing properties not to live in, but to sell at a profit. Developers overbuilt in response to rising demand, leading to massive oversupply when the market collapsed. 3. The implosion. When the bubble burst by 2007, warning signs were everywhere. Borrowers began defaulting en masse as adjustable rate mortgages reset to higher payments they couldn't afford. Foreclosures surged, flooding the market with unsold inventory and driving down home prices. The domino effect was swift and devastating. 1. Financial institutions collapse. Major banks like Lehman Brothers filed for bankruptcy, while others required government bailouts to survive. The entire financial system teetered on the brink of collapse. 2. Homeowners left devastated. Millions of Americans lost their homes, wiping out decades of equity overnight. Entire neighborhoods turned into ghost towns as foreclosed properties sat vacant. 3. Global economic fallout. The housing crash triggered the Great Recession, plunging economies worldwide into chaos. Unemployment soared, businesses shuttered, and trillions of dollars in wealth evaporated. 4. Why this was the biggest housing bubble ever. While previous housing bubbles had localized impacts, e.g. the savings and loan crisis of the 1980s, this one was different. Scale. The sheer size of the US housing market meant the collapse reverberated globally. Interconnectedness, toxic assets tied to US mortgages infected banks and pension funds worldwide, amplifying the damage. Human toll. Millions of families faced displacement, job losses, and shattered dreams, a human cost unmatched by earlier crises. 5. Lessons learned. Where do we go from here? A decade later, the scars of the housing bubble remain visible. While regulatory reforms like the Dodd-Frank Act aim to prevent another meltdown, new challenges have emerged. 1. rising inequality. The recovery disproportionately benefited wealthy investors who snapped up foreclosed homes, exacerbating income inequality and reducing affordable housing stock. 2. Another potential bubble. Skyrocketing home prices in recent years have raised concerns about another bubble forming, driven by historically low interest rates and limited housing supply. 3. The need for accountability. Many argue that those responsible for the crisis, bankers, regulators, and politicians, faced little to no consequences, undermining public trust in institutions. 6. How to protect yourself in an uncertain market. If history teaches us anything, it's that markets are cyclical. Here's how individuals can safeguard themselves against future downturns. Avoid speculation. Treat real estate as a long-term investment, not a get-rich-quick scheme. Understand your mortgage, read the fine print, and ensure you can afford your payments even if rates rise. Diversify investments. Don't put all your eggs in one basket. Spread your assets across stocks, bonds, and other vehicles. Advocate for reform. Support policies that promote transparency, affordability, and accountability in housing markets. Conclusion: a cautionary tale for the future. The implosion of the biggest housing bubble in U.S. history serves as a stark reminder of the dangers of greed, complacency, and unchecked ambition. It reshaped lives, economies, and societies, but also provided valuable lessons about resilience, responsibility, and reform. As we move forward, let's remember, the next bubble isn't a matter of if, but when. By learning from the past, we can build a more stable and equitable future.